Rajat Sharma, founder and CEO at Securities, who's joining us on the show. Rajat, hi, good afternoon. Thanks so much for taking the time out and speaking to us at ET now. Quickly, want your view on the entire metal space that's up and away, shining very brightly in today's trading session. Of course, week to date, also the metal pack has done very well, and month to date as well. The metal packs have clocked a gain of 5.5%. Vedanta, Hindustan Copper, SAIL, Tata Steel, all of these stocks have done pretty well over the course of last couple of trading sessions. What's the outlook going ahead on the entire metal pack of stocks?
Well, the short answer to that is I don't know because I'm not invested in metal stocks, and given the slowdown in the metal demand, I'm not looking at this sector. And anyways, I've not liked this sector because of the debt issue. So I'll cut that short, and I'm not invested in looking at metal stocks right now.
Rajat, also tell us that what are you looking at this point in time, given that everybody has been calling out for a near-term bottom at least in place and advising to start looking out for opportunities. Are you also having that same thought?
Yeah, no, I've had that same thought for a while now. I've had that thought, if I'm being very honest, I've had that thought around, since the time when markets were 4-5% higher than where they are right now. However, today's bounce back, I think is more of a short covering, and don't be taken away by this. Keep investing systematically is my sense. And where I'm looking to buy, you were talking about banks. That's one of my favorite sectors right now because one after the other, you see news, everything seems to be pointing towards a major recovery in financials, and particularly large private banks. First it was taking away of tax advantage which debt funds had, where they were no longer tax advantage, so a lot of money started coming back to traditional banking system. Now NBFC is not allowed to extend line of credit to their customers, while large private banks can do that overdraft facility. So and also keep in mind that large private banks like HDFC, Kotak, IndusInd, barring ICICI, which because of its merger with ICICI Securities has performed really well. Most of the other large private banks are available at their historic low valuations. So I'm really positive on that one sector, and the other being consumption, particularly FMCG, where nothing seems to have happened. And I've spoken about stocks like HUL, Asian Paints, largely sticking to, in both cases, private banking and consumption, largely sticking to India-centric stocks, which would not really be impacted by what happens to. So far, that's been our approach. What happens with the tariffs and everything, because they make in India, they sell in India. That's where we've been increasing our allocation. And it may take a while, but I'm pretty sure that these two sectors will bounce back. I actually have one view which may just be a little contra to what I keep hearing, that everyone keeps talking about the fact that this correction that's happened, it's not going to be a V-shaped recovery. It would take a while for markets to rebound. Given purely when I look at my clients' portfolios and the high net worth individuals that I'm dealing with, a lot of them are still sitting on a lot of cash. So despite this correction, I have not personally, I don't know why this correction is happening. I think it's purely largely still FII oriented selling who are happy to sell at lower and lower levels because that's what you're seeing. In terms of my client book, I've not seen any redemptions. I've not seen any slowdown in investment. In fact, on the contrary, they're investing and they're still holding a lot of cash. So then there's so much money lying on the sidelines. Whenever this tide turns, my sense is money will come back quite aggressively, both from domestic and look, FIs are not going to stay out for a very long time. So, and when that money comes in, it would be in frontline indices because FI money is usually not invested in small and mid caps. It would come back in frontline indices, Nifty, Bank Nifty, those top 10, top 20 names. And those are the ones where you should be looking to buy this ones which are battered mainly.
Interesting view coming over there. Hold that thought because you mentioned a name. Asian Paints is something that you're liking from the consumption space. Naresh, I want to come to you on that. Give us a technical outlook on Asian Paints because as I can see, that stock is at a 52-week low. It's been beaten down in trade on the back of a couple of fundamental factors as well, on the back of Birla's entry into the paints segment. Ever since then, Asian Paints has not done well. Q3 has also been rather sluggish. But on the charts, now that the stock has been beaten down so much, are you spotting any sort of recovery for Asian Paints?
So in the short term, tough to find a reversal here. But if you look at the price point today, we are at 2100 odd levels. Pre-COVID, the price used to trade at 1850 to 1900 in 2019. So very few stocks have actually gone back to pre-COVID levels. Also, the stock used to be this prices back in September 2020. So in that sense, at current levels, you don't have a lot of downside. Whether it will be a recovery very quickly is tough to call. But looks like at this point, going forward, there could be a bounce back and then a base formation rather than a further downside from here on. So, and the stock has already corrected from 3400, 3600 all the way down to 2100. So that's a large correction, which Asian Paints has seen for the first time in many, many years.
That's the take coming in on the paint major, but I would just like to take that point forward what Snehi was making with respect to metals, because that pack is definitely shining bright. There are a lot of news flow on this one. On one hand, we have that macro data coming in from China, which seems to be supportive, but on the other side, it's S&P rating, which has come out with a note where they are highlighting that given the fresh tariff, especially on the steel and aluminium from Donald Trump, there is a possibility that these cheaper imports could find their way into the Indian markets, and that's one of the factors that has already been impacting the Indian players largely, and the industry has been calling out for some restrictions on that front so that at least domestic prices can be held up well. But given all these news flows, we are seeing that this pack is definitely seeing a good rebound. That's metal index for you, a 4% jump on that particular index. But Kunal, if there's any stock that you wish to flag off within the metal pack and especially within the steel pack, because these stocks are having a good day indeed, 4 to 5% jump coming across the board.
Yeah, I think it's been a good day for many of the metal stocks. Something which I've been bullish on from the metal pack over the last 1 week and almost consistently has been Tata Steel. I've been riding this uptrend from 120, 125 for Tata Steel to current levels of 145 plus mark. I would still believe that the stock looks fairly attractive, but what happens is after such kind of a 4-5% up move, it's bound to be that the stock takes a pause for a couple of days and then moves up higher. But I also believe that Hindalco is the other stock which has started to look extremely attractive. So what's happening is that many of these metal stocks, they're providing two-pronged breakouts. One on price front, where these stocks have come back into a major trend line breakout of the last 6 months, 9 months, 12 months kind of a price correction mode. That's the first indication that the trends for these metal stocks is reversing. The second, the more intriguing one, is that many of these metal stocks are now coming back about their longer term moving averages. For example, Tata Steel, just about I think a week or back at 135 levels, the stock was on the verge of a breakout of its 50-day moving average. Now at 145 plus mark, the stock is on the verge of a breakout of its 200-day moving average. JSW Steel has already done that in terms of a breakout above both these two key average levels. Hindalco is also on the verge of a similar kind of a breakout. So when you put this into context, that 3 out of the 6-7 prominent names from the metal pack, they are showing signs of a formidable up move, as well as a strong price as well as indicator breakout. That itself indicates that this could be a sustainable move. The two stocks which I would want to highlight from current levels, of course, could be more of a buy on dips, could be Hindalco as well as Tata Steel.
Hindalco and Tata Steel looking good to Kunal from the metal pack. Rajat, coming back to you once again. On one hand, while you like financials and consumption, talk to us about sectors that you are still a little wary upon, where you are treading carefully, and also give us your view on something like an IT, pharma, or auto. What are you making of these sectors?
Sure. So, auto is a sector which I like, given, the stocks that I have in my portfolio. And let me make a disclosure. I've had Tata Motors. I've recommended it on your show. I have it in my portfolio. It's available at very, very attractive levels. The problem is this was one stock which was supposed to be the, front runner in terms of making that EV switch in India in the passenger vehicle category. But then there's so much going on in auto space right now with Tesla coming to India, the whole shift and the whole regulatory landscape shifting towards EVs. Broadly, we are avoiding this right now. So the fresh buying that I am doing for most of my clients is right now in consumption and within banking. There's one odd stock that we've added, Sanofi India, which posted very, very good numbers. This is after the company has split into two, because Sanofi India, the numbers that they posted, they're expanding their cardiovascular practice through mergers and expansion, and available again at very cheap valuations. After the merger, they started improving their earnings and available at multiples of 29, very good dividend yield of about 2.5 to 2.5%. So that's one stock we've added. So pharma is one exception where I'm adding stocks where the sales are happening outside of India. But other than that, until this whole tariff war settles down, it it sort of confuses me why people would not buy stocks within large private banking and within consumption space, because it's not like the slowdown, particularly in consumption and FMCG, is going to stay around forever. I know that there is a genuine slowdown, but if earnings start improving from here, the stock prices could perform far ahead of the earnings. That's how cheap they're available right now. So the two sectors where we're doing buying is private banking and consumption. Auto, broadly, we are avoiding. I've already spoken of steel and metal, which is a space we are avoiding. Pharma, I've made some buying. The other sector I'm still staying away from is PSU. A lot of investors are actually jumping in into buying PSU stocks because they seem to have corrected, particularly power generation stocks. But keep in mind from where they started running, and for no reason. A lot of these stocks for 10, 20 years have traded at 50 to 60% cheaper valuations where they're trading now. So I don't see any reason why this change has happened. So not looking at buying anything there. So that's where we are sticking to private banking and consumption space.
So private banking and consumption is the place to be, as well as Rajat also shared select pharma names that he is bullish on right now, one being Sanofi India, of course. But other than that, what's holding up well is Indigo. Let's pull up the chart, because that stock is definitely flying high, didn't participate much in the recent market fall. And what we are seeing is that the stock is now approaching its earlier highs that we have seen back in the month of December, close to 4750 odd levels. But Naresh, I remember that you have been tracking this stock, you have been recommending this stock as well, and now that yet again it's a 2% jump coming in on this particular counter, do you believe for those who have taken your advice, it's good time to maybe look to book out some profits here?
So it would be a bet wherein you continue to scale the position. The stock has shown strength. And first, it did not break below 3,800, 4,000. Now it's given a short-term breakout, very close to taking out the recent swing highs and getting into new all-time highs. And also the fact Brent crude now at closer to 70 odd levels becomes a positive for the stock. So structurally looks like the stock which could be a leader going forward. So for now, partial profit booking is fine, but one could keep a trailing stop loss now at 4,500 and write it off.
Outlook on Interglobe Aviation. Kunal, have to get your view in on Coforge. It's a stock that's been in focus, 8.5% gain. Do you believe that this, after this gain, the stock still has some more legs to the rally going ahead, or this is a one-off on the back of the multiple news flows that we've seen, and now a slowdown could be expected? What's the outlook?
Yeah, I would probably believe that could be the latter, where I would believe that the stock could have seen a one-off up move, because there was a similar kind of a price volume uptick for Coforge. I think just about almost like exactly 1.5 odd months back, when the stock moved in a single day from 8,100 levels to almost I think 9,200 or 300 mark. That was the high the stock had made on a single day. Post that, in the next subsequent 2 to 3 trading sessions, the stock actually caved back into the selling pressure and managed to come back towards retest of the previous support. The concern with the stocks or charts like Coforge is that the structure for the overall IT space, large cap and mid cap, I think it's still on the negative side. So that's where I would believe that maybe I think we should take it with a pinch of salt. My expectation is that the stock over the next couple of days, maybe not immediately tomorrow, I think over the next couple of days should probably try and get back into a corrective mode. I think maybe closer to 7,500, 7,400 would actually be a much more better range in case if the stock cools off and comes back to that level for a good contra buy.
All right, that's the take coming in on the IT space and specifically Coforge. But Rajat, I wanted to have your take on some of these beneficiaries with respect to the crude oil price, because Naresh was just flagging off that now that the crude has slipped off and now the Brent oil is actually below that $70 per barrel mark, Indigo is the key beneficiary. You're just highlighting Asian Paints for us. But within the auto ancillary tire stocks, what we have seen is that they have also have had their share bit of correction. Do you believe that it's time to look out for some of these tire companies rather, or any other particular theme with respect to the crude oil falling off?
Yeah, definitely tire stocks, auto ancillaries is something you can add because right now they're available at decent valuations. I think if you see a CAT, it's available at 21, 22. I looked at this, but I think the biggest beneficiary of this would be the oil marketing companies because those are available fairly cheap, BPCL and HPCL. Whenever you see crude prices stabilizing, that sort of helps oil marketing companies because they're inversely related to crude oil prices. And at the same time, the likes of ONGC and Chennai Petrochemical, these companies will struggle. All of them pay higher dividends. So if you had to buy something, BPCL, HPCL would be a good thing to buy. I'll actually come back once to the IT pack. And since you asked me that question last night, completely missed out on answering that. I was just hearing Nuresh. I have this view that there's a lot of talk which is taken out of proportion in terms of artificial intelligence and, Indian IT struggling because of that. Artificial intelligence may be true, but I don't see Indian IT struggling. I have Infosys in my portfolio and I keep adding it the moment it comes to around 1700 or, goes slightly below. And I keep recommending it as well. It comes at a very attractive dividend yield right now. And why I say this is because, their earnings are not impacted. So, Infosys earnings, so long as it's growing at 15, 16% annualized, some years it grows 20%. There have been years where it's grown as little as 2, 3%. But the AI has been around for a while now. And even if you see their quarterly earnings, they've not made any dent. So, these large IT companies in India, either they evolve and, benefit from the AI transformation, or it'll take them some time. But so long as their earnings are intact and the stock keeps getting cheaper, it's a great opportunity for anyone to buy that. So I think right now, if it's looking weak structurally, the whole IT pack, it would actually fundamentally be a very good idea to buy these stocks and hold on to these stocks in their portfolio because I have many times in past said if one global multinational company that will come out of India in the next 10 years, it will be from IT because we do IT probably the best. And this may be my personal view. Whatever is happening in the US will ultimately help the Indian IT sector. So if things move around in the world, it would actually be beneficial for Indian IT. So that's my view on IT. That's one more sector where I'm really positive right now the way it fell the last 3-4 trading sessions. And look, Infosys and TCS, these are stocks. Infosys, anytime it's below 1700, I like to buy it. But yes, tire stocks, they do look attractive at these prices. And I also feel that they will continue to be attractive, both tire stocks and for that matter, oil marketing companies, because low crude oil prices are here to stay given everything that's happening in the United States. And they're going to start fracking and they're going to produce a lot of oil. I'm in no doubt of that.
Is very bullish on the IT pack and especially Infosys from there. And also tire stocks are looking good right now on the back of falling crude prices. But time now to get in some BTST trades. And Kunal, what is your BTST call for the day? What's looking good?
So, Sneha, I'll go with two buy calls, and both of them are completely different in terms of the chart patterns. First one is about JSW Energy, a stock which is completing an inverted head and shoulder pattern at current levels of 500 plus. So, would look out for targets in the range of 535, stop loss at 490 for JSW Energy. And the second is about Bajaj Finserv. I understand that there's been some negative news flow for the stock, but then today's candlestick pattern is a classic hammer pattern for Bajaj Finserv. And there is a very strong probability that after such kind of a hammer formation, the stock generally moves up higher. So my expectation is the same for Bajaj Finserv. Buy with a target of 1880, stop loss at 1755.
All right, so two buy calls coming in from Kunal at this point in time, but definitely a good day for the Indian markets. But is it India's moment on the global stage? Chris Wood remains bullish despite a near-term cut in their ratings across portfolios, while Jim Walker says that India stands out for the policy stability. Both agree that India and China could be 2025's biggest winners. Let's go across and listen into them.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the near. Well, they have been outperforming year to date, and they can do so more. I would say are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week, that this is the time to absolutely double down on the long on India, go much, much longer. And they, although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
Base case for now is that the same thing will happen as happened in 2016. That is that the dollar peaked when Donald Trump entered the White House. That's what happened in the first Trump administration. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So that's my base case. So I'm hoping that the tariffs do not prove to be as big a deal as currently threatened. But if I'm wrong on that, the tariffs in the short term will be inflationary. In the longer term, they'll be negative for growth.
I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, yeah, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
Okay, that's the word coming in from two of the biggest global voices, Jim Walker as well as Chris Wood. As we're close to wrapping up on the market today, Adani Ports, Tata Steel, Adani Enterprises, M&M Power Grid holding smartly with gains of 4 to 5% each. On the flip side, it's Bajaj Finance, IndusInd Bank, HDFC Bank that continue to add some pressure to the market. But Rajat, coming back to you, I couldn't help but notice today Bajaj Auto is at its 52-week low, and since you are bullish on the entire auto pack, help us understand what's happening with this stock and what's the outlook going ahead. If you could quickly just sum up everything that's been happening with this stock and what's your outlook here?
No. I didn't say that I'm bullish on auto pack. I said I'm actually avoiding this right now purely because it's happening because of EVs coming in. Now, Bajaj Auto, of course, in two-wheeler space, whatever had to happen regulatorily has already happened. But you see, even Hero Moto, TVS, but all of these stocks in the last 2-3 years have corrected a lot after moving up fairly. And I think the only thing I could point this to is general change of sentiment after a massive rally and then, everything happening in the auto space. It's a general avoid, nothing wrong with these stocks.
The take on the auto pack, but yes, of course, it's been a good day for the markets indeed, though we are off the day's highest point when it comes to Nifty Bank, but we can't complain much given the fact that the US handover was quite very weak, though there was some bit of an excitement in the Asian markets, and what Nifty 50 has done today is a great recovery from the lowest points, and on an intraday basis, a commendable one indeed, 22,300 and above is what we have seen on this particular index, while India VIX was actually holding in that red zone, and Nifty Bank also holding strong with almost 220 points of gain, while for the Nifty Bank index, where we were used to seeing those 600, 800 points of gain on an intraday basis, I believe that we have to be happy with these 200 points of gain at least. Some of these majors within the banking pack like HDFC and IndusInd, they didn't participate in the rally. Let's watch out for those in the upcoming sessions. But yes, of course, some of these beaten down names from the auto pack, they did very well for themselves. Some of these defense related plays were once again up, and stocks like BEL still holding on to the gains of 3.5% right now. But with this, Rajat as well as Kunal and also Naresh would like to thank you guys for taking the time out and speaking with us this afternoon.